You're listening to Bottomshelf Bitcoin, episode 23.
Relax. Enjoy your coffee. Okay. Good morning, everyone. Take a chill pill. Okay.
Hey everybody, welcome back to another episode of Bottomshelf Bitcoin, the podcast that puts Bitcoin knowledge within everyone's reach. As always, I'm your host, Josh Humphrey, and we are back from hiatus. I was gone for a couple of weeks. I went to BitBlock Boom and spent some time with my family, and that's been a lot of fun, but we are back. And to kick off our, resumption of the show, my guest today is Nik Bhatia. He is a bond trader, a guy who works in the traditional finance world, but is also very much into Bitcoin and has written several articles recently on Medium about the Lightning Network and how that can all be used as a basis for lending rates and things. And so I'm gonna ask him a bunch of questions because I have almost no knowledge of the traditional finance world. So Nik, welcome to the show.
Thank you for having me. Appreciate it.
Yeah, absolutely. So, so you are a bond trader. Well, before we get into that, tell me kind of your background and then how you got into Bitcoin, if you don't mind.
Sure. So I work at an investment manager in Los Angeles. We manage assets for institutional clients. And I trade U.S. Treasuries and other interest rate futures over there. I got into Bitcoin in 2016. I had heard of Bitcoin many years before that, but never did the deep dive into how it works until 2016. And then, I was reading a lot about it and trying to learn a lot about it right around the time that SegWit was announced. So I got to live through, the whole SegWit drama, and something about Lightning Network really attracted me to Bitcoin pretty much from the beginning, and started writing about my ideas about interest rates on Lightning Network a few months ago, and finally published the articles before BitBlock Boom.
Very cool. And BitBlock Boom was a lot of fun. I know it was not as big as some of the other conferences, but I had a blast, and I thought it was really cool for you to be up there talking, and then just to kind of turn it over and ask the audience questions and ask their opinions and if they had ideas that could kind of work with it. So that was really cool.
Yeah, I had a blast at BitBlock Boom in Dallas. I got to meet a bunch of people that I've been following on Twitter for years. And, I was just a Twitter lurker for, years trying to learn about Bitcoin until really this year where I started a fresh account and actually started to engage with people. And I got to meet a bunch of those people in Dallas and got a lot of great feedback. And it was the perfect place to kind of release my material for the first time.
Very cool. Yeah. So, and I know you and I had kind of talked about this out in the hallway there. You said, you made the statement to me, which I had never thought of, that the finance and the worlds of finance and economics are different languages almost, and are, I guess, definitely different studies. Can you kind of go into that a little bit? Because I really come to this from more of a technology, a little bit of Austrian economics side of things. And finance is not my thing.
Right. So economics is the study of how economies work and what affects them and how they relate to, or how economic entities relate to each other, like countries, companies, all that. Finance is basically a series of cash flows. So an investment in something is a negative cash flow, and your income is a positive cash flow. And that's really what finance is about. Finance is about how companies spend and then earn money. Economics is how the economy functions and the study of that. So they really are different. Economics has a lot of theory involved, and finance is really decisions, and decisions that lead to profit or loss. So they are very distinct. And, I didn't realize that really until studying economics in college, when I realized that, this has nothing to do with business and how we invest and try to make money on investments, whether it's in your own company or buying shares in other companies or lending money to other companies or governments, etc.
In I think your first article of these recent ones was the time value of Bitcoin. Is that right?
That's right.
See. I've got them pulled up here. Okay. So, and you kind of talk in there about how, I don't want to reread the article to people because they need to just go read the articles. I'm trying to think how I can kind of summarize the ideas in there. Or maybe you can summarize the ideas better than I can since you wrote it.
In the time value Bitcoin, I basically outlined that I think we can use Lightning Network to establish a time value for Bitcoin. And what that means is how much is Bitcoin worth from point A to point B. Now, typically in cold storage, 1 Bitcoin equals 1 Bitcoin. It doesn't matter how short or long the duration that Bitcoin is in that private key. And in Lightning Network, that's not necessarily the case. And that's the big leap that happens with Lightning Network is now your Bitcoin at the beginning won't necessarily equal your Bitcoin at the end of that payment channel where your Bitcoin is in, and it potentially is more than what you started with. And that's basically what interest is. You invest some capital and you get back more capital at the end of the agreement than what you started with. And that's really what started this whole thing, is that Lightning Network means that 1 Bitcoin can actually equal 1.01 Bitcoin if you wait long enough. And that's really what I'm trying to explain here. Now, how it leads to a path to the world reserve currency is more of a multi-step process, but establishing time value is the first step towards that.
Okay, and that's just to be clear. We've done a couple episodes about Lightning Network on here, but for anyone who doesn't get what you're saying, basically, because if you're willing to fund some channels and create some liquidity, you're basically being rewarded for putting your Bitcoin into these channels and to be used by the network.
That's exactly right. Yeah, and the Lightning Network white paper puts forward this idea that what you're doing is you're staking liquidity to the network, and you're actually providing a short-term lease of your Bitcoin to those that want to use it, and they pay you a fee in exchange for that time that you're leasing it to them. Even if it's instantaneous, they're rewarding you for that, and that's why we can establish a positive time value, is because your money is locked up for a certain period of time, and you can earn fees in that time. And when the channel is closed, you end up with more Bitcoin than you started with.
Okay, so more or less, like once we have the time value, then we can determine like an appropriate rate for nodes and channels in the Lightning Network that makes sense, correct?
So it's really a multi-step process. The first step is, let's see how much people are actually earning, right? And so we calculate, how many fees they earned, the total Bitcoin that it took to put in all those payment channels, and the time that it took to do so. And looking backwards, we can see, okay, what was the interest rate of this one node? Now, once we get if nodes are willing to publish that rate to the network, to each other in some sort of trustless, hashed way, where we don't have to trust somebody, but we can actually prove that what they're publishing to us is factually accurate. What we can do from there is assess the reward for Lightning Network as a whole, and whether that's some sort of average or some sort of open source publishing mechanism where people can publish their interest rates to each other and express them on like terms, which basically means I'm putting forward the same, I calculated it the same way you did. And if everyone can publish that to each other, then we can establish what can someone expect to be rewarded for establishing a Lightning node and staking this Bitcoin to these payment channels. Now, there are a few things here. One of them is that not everybody will be as good as the next guy in how he manages his payment channels, right? Some guy might be really good at it and charging fees that he knows are going to win as far as people choosing his route. And he'll make more money than the next guy who doesn't pay attention as well or doesn't have the technical knowledge to position himself in the network correctly, and he won't make as much money. So there will be winners and losers within just the Lightning Network and establishing or earning all those interest rates. Then, because Lightning Network, you're still maintaining custody of your private keys, in theory, lending your Bitcoin to somebody and actually relinquishing the Bitcoin itself and sending a transaction on the blockchain you should be rewarded more than what you would be rewarded on the Lightning Network because you're taking more risk. And that's the age-old adage of more risk, more reward. And so my idea of Lightning Network's reference rate is kind of the next step where Lightning Network establishes baseline interest rates for something that's considered relatively low risk. It's definitely not risk-free. There's, security risk and channel state risk and payment channel management risk and all these risks, things that can go wrong and you can lose your Bitcoin in Lightning Network. But it's not like you're putting it on an exchange or lending it to some guy on the street and sending them your Bitcoin to their receive address, and then it's gone from your custody, and you have to trust them to pay you back, right? So it's kind of this progression from Lightning Network risk, which is low, and other risks, which should be higher, and therefore a higher interest rate or a higher reward.
Gotcha. Yeah, I thought that was really cool. You have this chart here where you have the lowest risk and the lowest reward is the cold storage, right? Like you said earlier, cold storage is 1 BTC equals 1 BTC, and then this Lightning Network risk, like you said, there is risk in the Lightning Network, but you also have, if someone tries to pull a fast one on you with Lightning Network, you have the advantage there. You are disincentivized to cheat people, and it most likely will go bad for you if you try and cheat someone through Lightning channels. So, that's a good starting point, I guess.
And let me just clarify one thing: in my articles, I've said that I don't think there's any explicit counterparty default risk. Now, people are dissecting that a little bit, and I guess I can say that there's malicious counterparty risk, like you were saying. You're disincentivized to cheat somebody because they can broadcast the correct state and sweep all your Bitcoin from it.
Right.
And so I can't say without I can't say with 100% certainty that there's no counterparty risk, but the message I'm trying to drive home here is, like you said, it's there are a lot of reasons that you should be able to recover your Bitcoin as long as you manage your HTLCs properly, and it's very unique to have that sort of income opportunity without having somebody be able to just default to you really at any point with no recourse.
Yeah. And so, from your background in finance. You kind of mentioned these other treasury rates and these other reference rates that are kind of based on that. Can you talk a little bit about that for maybe those who aren't, who don't understand treasury rates or who don't really have that kind of background?
Sure. So think of the U.S. government as your lowest risk borrower. If you are a lender of money, you have capital. You want to lend the money to somebody. Who or what is the entity that has the lowest possibility of default? Right now in the traditional finance markets, and as it has been for decades, that entity is the U.S. government. And so U.S. treasuries are considered the risk-free rate, even though it's not risk-free, right? The U.S. government can default. They've just proven that, over the course of couple hundred years that they haven't ever defaulted. And so U.S. treasuries are considered that baseline interest rate. And in theory, no entity should be able to borrow at a lower interest rate than the U.S. Treasury. Now, it has happened in certain cases. Theory isn't always perfect. At times, certain companies traded with their interest rates lower than U.S. Treasuries. Also, different countries have interest rates that are lower than U.S. Treasuries. But those are denominated in different currencies. For example, Germany has an interest rate that's lower than the United States interest rate right now, but those bonds are in euros, so you're not really comparing apples to apples there. But right. Not to digress too much, U.S. Treasuries are considered that baseline interest rate. So a company that's going to borrow, they actually borrow at U.S. Treasuries plus and then a percentage. So, for example, if the U.S. Treasury is 3% on their 10-year bond, a company, let's just say Walmart, borrows at U.S. Treasuries plus 1%. So if the day that they issue, the Treasuries are at 3, they'll issue at 4. If the Treasuries are at 2.75, they'll issue at 3.75. And again, those things are always fluctuating in the market. The spread to Treasuries is fluctuating based on how creditworthy the borrower is. But the long story short here is that borrowers have to look at what U.S. Treasuries are and then offer a spread on top of that. And so the corollary to Bitcoin is that Lightning Network can act as that reference rate where it's a lower risk entity. And if you're going to borrow Bitcoin, you should pay the Lightning Network rate plus a spread, right? Because it shouldn't be just 0 plus a spread anymore, because we can now earn money in Lightning Network in a very low risk way, right? A relatively low risk way.
Right.
And that's the point here. And then, I get into some other interest rates in my article that are reference rates. But, how those function and their position in the markets, it's not necessarily important to understand, how reference rates work. If you get this U.S. Treasury example, there's a rate called LIBOR. And, if you're interested, we can get into how LIBOR is different than treasuries. And I think how maybe it applies to Lightning Network in a decent way. But
sure. Yeah.
Yeah. So, sure. So LIBOR is, LIBOR is as an average of interest rates that banks borrow at. It used to be more of an interdealer rate, which means that it's the rate at which banks would lend to each other. But that market has dried up since the financial crisis a decade ago. And now LIBOR is essentially an average of where banks borrow from investors. So if you want to buy a short-term bond of a bank, you're lending money to that bank for 3 months, let's say, for example. The average of all those rates around the world is what makes up LIBOR, what banks borrow at for 3 months. And so 3-month LIBOR is a reference rate for a lot of instruments out there. So a lot of people's mortgages refer to LIBOR. Companies that borrow from banks have to pay LIBOR plus an interest rate. And why is that? Because banks borrow at LIBOR. So they want to lend at LIBOR plus, right?
Right.
So I think that LIBOR is also a good example of a reference rate. And, there are some corollaries of LIBOR and what would be the Lightning Network reference rate, or what I call LNRR. And, that's the fact that people are lending to each other on a very short-term basis, kind of like the banks used to do. Now the banking system is a little bit more fragile, and banks aren't trusting each other that much anymore. So they have to fund themselves from investors instead of each other.
Now, is that because of things that went on in 2008, or
That's
what?
right.
What is?
Yeah.
I mean, I'm just trying to figure out here. So, like, what caused them to not trust each other?
Well, it does stem from 2008, where the interdealer market, stopped working during the crisis in 2008, and it basically never resumed.
Gotcha.
So yeah, there's a hangover there, and now LIBOR has to be calculated differently than it used to be, because it used to be, the rate that, and also the manipulation scandal that a lot of people are familiar with. Banks would publish this rate to each other and kind of move it up and down based off of trying to skim money off the top, and but now it's less easily manipulatable because they actually have to publish the rates at which they borrow from investors, so they can't just kind of keep it private between them as much anymore. It's more of a verifiable rate, if you will.
Yeah. Well, I mean, and that brings us back to Bitcoin, right? Because that's so much of what we're trying to do is make this stuff transparent and open, while we are trying to maintain a certain level of privacy and censorship resistance at the same time, where we're trying to keep people from cheating each other.
Absolutely. And, if you read a tweet of mine that says LIBOR in it and you haven't read my article, I understand if it does raise a red flag for you, because LIBOR it's the opposite of what Bitcoin is, right? It's a closed group of banks that, the barrier to entry is very high, and, they're kind of just setting this interest rate or publishing it to each other. And it's not a very open source process whatsoever. But what I'm proposing is a fully open source process, but uses LIBOR as an example of how does an interdealer market develop a reference rate, right? And I kind of think of that interdealer market as all these big Lightning nodes that are going to have a lot of funds in channels. Now, you're probably not going to get 1 billion people to run a Lightning node in the next few years, right? It's going to be, not that many nodes. Maybe it's 100, maybe it's 10,000. Maybe it's 100,000. That would be great. But it is hopefully going to be an open process where the development on how we can calculate each node's interest rate is going to be an open source process. The method by which we publish those rates to each other is going to be an open source method. So I do understand the people that are reacting negatively and just seeing the word LIBOR as an analogy for the Lightning Network reference rate. But in reality, that's not what I'm proposing at all. I really want an open source version of LIBOR per se.
So you talked at BitBlock Boom a little bit, and I was trying to see if I could find it in one of your articles, and I probably just missed it because I'm going quick here. But you talked about the potential for kind of almost a reputation system that determines a borrower's risk for lenders, potentially based on something like this LNRR. Can you kind of expand on that a little bit?
Sure. It's not something that I've written about yet, so
okay.
I hope you didn't look too hard.
No, I was just kind of glancing over.
Yeah, but I'm not the first one to talk about this kind of thing, but there has to be a way to link transactions together to establish your creditworthiness. Now, somebody pointed out very quickly that can't you just pay yourself back and go back and forth between, a bunch of different addresses and make it look like you're this very creditworthy entity by showing, the history of your borrowing and then repaying of your debt. Sure. Possibly yes. And that's something that I hope developers will work on. But, if the blockchain is a public ledger, right? That's how Bitcoin works. And so, yeah, if you can connect, if you can show that transactions are related to each other by the private keys that they're going in and out of, you should be able to establish creditworthiness on chain. And there are ideas out there floating around about that. It's not something that I'm going to be focused on immediately. I really want to see developers try to come up with a calculation method for Lightning Network. But I do think eventually the two concepts can meet, further down the road, where we can have some sort of Bitcoin credit rating system. The rating agencies in traditional finance, again, like LIBOR, it's a closed source system. You're not really sure. I mean, they do show how they are making their ratings. They do have very specific guidelines that they publish, but it's still a closed process, right? Those companies are private in nature. They collect fees from the companies or entities that pay them for credit ratings. And, let's try to build the open source version of that on Bitcoin so that people can actually see how it works and see for themselves, verify on their own fully validating node, your transaction history. I know that Bitcoin and the protocol will hopefully go in the direction of privacy. I know a lot of, like confidential transactions. There are a lot of developments on that path, and Lightning Network is a huge privacy boost to Bitcoin. And the more hops that your transaction goes through, the harder it is to track. And those privacy benefits will hopefully continue and be there for those that want them. But there will assuredly be entities that want to have all of their transactions public so they can show how creditworthy they are, right? There's going to be both sides of the spectrum. And so I hope that there are efforts made towards proving your creditworthiness through time on chain. And, that can help borrowing markets.
Yeah, I'm sitting here trying to think, and I know we kind of bounced these ideas around a couple weeks ago, but I wonder if there is a way to prove your creditworthiness without proving the rest of your transaction history. But so if you're listening out there in podcast land and you've got good ideas on that, start working on that, because I don't know how to make that work either. But yeah, I think that's a cool idea. So to get back to what you were talking about on the kind of open sourcing these rates, and I guess we're still kind of right now in an observational stage, and dependent on people to publish their own data. I saw your response and your analysis of the difference between Alex Bosworth's earnings and Andreas's earnings. I thought that was really interesting that it's not just the flat amount that is staked to a node.
Yeah, it's going to be, variable. Your return is going to depend on, how good you are at managing a Lightning node. And, that's a free market. And it was cool to see the disparity in interest rates. Alex Bosworth's node made for an annualized rate of 0.4% for, a week's period of time. And Andreas, a node that he also got a data point from, was only making 0.05%. So difference by a factor of 80. And, that just goes to show you that there's, even if we do end up trying to come up with an average, how skewed is that average going to be? How fat are the tails is something that we say in statistics, which means how many observations are there going to be at, the bottom 1% and the top 1%, right? And where do those tails come in? We have no idea. And Alex Bosworth, wanted to, when I was thanking him for allowing me to use his data, he, wanted the public to know that this is not indicative of anything, in the future. This is just what he happened to make for 1 week, and in the absolute beginning stages of this type of activity. So who knows what it's going to be in a month or a year from now, and how those interest rates will evolve. But it was really exciting to finally dissect some actual numbers. And interestingly enough, he disclosed the amount of fees in Satoshis, but the amount of Bitcoin staked to the payment channels in US dollars, which was a little funny to me because those aren't even like terms. So I had to, figure out what exchange rate he used or assumed in his calculation, which was about 7,400 at the time on Bitcoin, price in dollars. And, then I had to work backwards. So that just goes to show you that, we have to make sure we're all speaking the same language when we disclose our interest rates to each other. And so that process itself should be a lengthy open source discussion and development process where maybe we don't settle on the same calculation method, right? Maybe different wallet providers or different implementations of Lightning want to calculate it different ways. Maybe they'll converge over time, or maybe they'll stay separate, right? And I don't know what's going to happen. I would hope that everyone can come together on one method, because that would help establish a reference rate that can really be used worldwide. But if there happen to be 2, 3, or 10, and a free market, a free capital market references each rate that they feel is best or they want to use, then that's going to be what happens. And I fully support that as well. So I'm excited to see how things play out.
Yeah, it's really cool, and it's just there's so much potential here for capitalizing on what you've got, and especially, and this kind of goes along with the whole HODL mindset or low time preference, however you want to say it. But if you say, hey, I've got this, I'm going to hold on to it anyways. I don't plan to spend it right now, and now we can start working towards like how do we use this to capitalize on this? How do we make money off it? But also be able to use it to, help others in the short term who, maybe have a higher time preference.
Right. And one of the origins of this idea that I had, and I'm not the first one to say you can make interest on your Lightning node. And that was something that Andreas Antonopoulos had spoken about, towards the beginning of Lightning Network, that concept. So, this is not something that I've invented here. I'm just trying to further an observation that others have made. But why I think it's so important and why I chose to dedicate my time toward this idea is because the knock on gold, which is sound money, has historically been, well, gold doesn't have income. It's a pet rock, right?
Right.
And that whole pet rock critique of gold is kind of true, even though gold is sound money and completely different from the fiat world. You can't get income from gold. I know that's not its function. Its function is to be sound, scarce money. But why can't Bitcoin do both? Be sound money and have income associated with it, on-chain income, right? Not off-chain where you actually lend it. Because you can lend gold to somebody, right? And then demand repayment in gold. But you're taking counterparty risk. But with Lightning Network, that really changes the game here. And, that's really what attracted to me, because I have studied Austrian economics. That is the, economic school that I subscribe to more or less. And I think that sound money is absolutely essential to our civilization. And, fiat, there are a lot of drawbacks to it. And if we can have a sound money that also has a little bit of income associated with it, that's something that excites me as a finance professional and a Bitcoiner and an Austrian economic school type of person. So that's why I chose to work on this and write about it, because I want to disseminate this idea of a sound money with income.
Yeah, very cool. Very cool. And just to be clear, while you are a financial professional, we probably have to declare that your ideas and your writings on Bitcoin are not reflective of your traditional finance employers.
That's correct. My ideas and my articles and my Twitter account are my own. They don't reflect the opinions of my firm. But thankfully, they are very supportive of my academic work on Bitcoin, and they get all my articles as well. And I'm very thankful that that they're supportive of this, and they want me to put out interesting ideas because they're aware of Bitcoin too. And no, we're not involved in Bitcoin in any way, and our clients don't hire us to do anything related to Bitcoin. But Bitcoin is changing money as we know it. And I think that there are a lot of people in finance that are aware of this concept. They might not fully understand, how Bitcoin works yet, or all the goings on in the development. They might not even realize it's a protocol, to be honest with you. But they are aware that Bitcoin has stolen the attention of a lot of the youth in finance.
So do you think, just, I guess on a lot of issues we tend to see, and not just Bitcoin, not just finance, just like across society on issues, you tend to see, like, especially on social media and things, you see a very vocal, polarized viewpoints, right? So you see one side and then you see the opposite side, and they're very, very loud about their opinion. And I think in Bitcoin, we see that. We'd see a lot of, a lot of FUD, or a lot of people like Paul Krugman or I don't know, Warren Buffett or somebody really downing on Bitcoin. And then you see people like Saifedean or Pierre Richard, or, some very vocal Bitcoin maximalists on Twitter. Do you think, in the circles that you run in, are there a lot of people that are just kind of watching right now, trying to see what's going to happen?
Absolutely. And, I understand where they're coming from when they ask me the following question, which is, what about all those other cryptocurrencies? Is something
sure,
that,
yeah.
I mean, that's the question that I get kind of the most when I say, I'm working on Bitcoin. And so I don't blame them. They don't understand how Bitcoin works. So for them, they can't really see the fact that it's a protocol and the history of how protocols, converge, and how SMTP is universal, HTTP is universal, TCP/IP is universal, and so they don't see it from that perspective. They think of Amazon and Walmart, or Ford and General Motors, or J.P. Morgan Chase and Goldman Sachs, right? And so, or Facebook and MySpace, right?
Right.
And that's the framework that they come with. So, I don't blame them for not being able to see that that's not really what this is about at all. This is about Bitcoin being the protocol that people around the world are converging to exchange value over the internet. And but to answer your question, yes, they are just sitting back and watching. Some are more interested than others. Some, will kind of pay attention when it hits the headlines, and others are kind of, tracking the price on their Bloomberg terminals and just kind of watching it peripherally. And I'm sure that there are plenty of people that, have Coinbase accounts out there as well that wanted to dabble. And so, but as far as the Bitcoin maximalist types in Bitcoin. If there are a ton of others out there in traditional finance, I haven't necessarily met them yet. Now, I see people on Twitter, right, that do come from my world that are experts in Bitcoin, or I know we don't like to use that word, but they're very knowledgeable about Bitcoin. But maybe a lot of people do work for regulated entities and can't just be out there talking about Bitcoin because there are a lot of anti-fiat sentiments in the Bitcoin world, and that is biting the hand that feeds them. So maybe they're kind of the silent type right now. I'm not sure. But I am very happy that I have the support of my firm to come out and talk about Bitcoin and, truly try to progress Bitcoin's capital market, and not just, out there talking about the price or, definitely not talking about, the direction of the price of Bitcoin, right? And how I think people can make money, trading Bitcoin. So I think because that's not what I'm focused on, I'm more able to come out and share ideas with people.
Yeah, that's very cool. And I think that's going to be things like this, like what you're working on, to me seems to be, everybody keeps talking about like, oh, institutional money is coming. And I think it's things like, maybe this ETF that people are talking about, or things like this where you go, okay, this is Bitcoin, but in a maybe a more familiar framework when you talk about things like lending rates and stuff. Because I don't know, I think a lot of people, or at least I did at some point when I really started looking into crypto anarchy and stuff, and it's like, oh, we can end the Fed and we can overthrow all these things, and it's like, it's not really going to be everybody living on farms and sending Bitcoin to each other. Like, it will still have some kind of society, and people will still, there will still be people borrowing money and those kind of things. It will look slightly different, but it'll still be there.
Yeah, definitely. And, there are a lot of people in Bitcoin that have, very different political, backgrounds, and there are definitely a lot of people that believe in crypto anarchy and libertarianism and all these types of schools of thought that aren't necessarily in the mainstream. And without talking about anybody's political alignment, we can actually just look at what's happening in Bitcoin and try to improve it and try to grow it. And that's really what I'm doing here. Completely aside from the Fed stuff or the anti-fiat stuff, which is all relevant as well, right? I mean, Bitcoin is this new version of sound money that the world has never seen before, and what can happen to the rest of the financial system because of Bitcoin spreading, is anybody's guess. But I would like to see Bitcoin succeed. That doesn't mean that fiat's going to die. Whether or not it does, I want to put ideas out there on how Bitcoin can evolve by itself without relying on fiat. And so all of my work so far has been completely in Bitcoin denomination and in Bitcoin native thought. It has nothing to do with the price of Bitcoin in US dollar terms, right? It just assumes people are using Bitcoin. That's it. And you can make the calculation back to dollars if that's your base currency. But for now, I'm just going to focus on people that think in Bitcoin terms.
That's very cool. Yeah, I think that switch is coming in people's head, but it's still hard because we go to the store, we go to a restaurant, and everything is denominated in fiat currencies, and even if you buy something in Bitcoin, it's in a lot of places you still have to make that conversion rate. So
right, but what can change that is interest rates. And, if you think, oh yeah, I can make 1% on my Bitcoin, you're thinking, I'm going to have 1% more Bitcoin. You can convert it to dollars, but you don't know what the dollar price is going to be at the end of 1 year or at the end of the term that, you're assuming that interest rate for. And so the fact that you don't know what the price will be in the future makes you think in Bitcoin terms. And it's kind of funny how that works.
Yeah, that's very cool. Real quick, you had a thread the other day about cryptocurrencies and Bitcoin being included in the CFA Charterholder test. Can you talk about that a little bit, and like what is a charter holder and why this matters?
Sure. The CFA Institute stands for the Chartered Financial Analyst Institute, and it's a professional designation that is awarded to candidates who pass 3 exams offered once a year, and so it takes a few years to attain, and it's well regarded in the asset management industry, and the type of people that try to get their charter are portfolio managers and research analysts and other investment professionals. There are, I believe over 200,000 or somewhere between 100 and 200,000 CFA charter holders around the world. They are employed by large asset managers, corporations. As far as the people that are a CFA charter holders in corporations, it's the people that manage the corporation's money in particular. You have CFA charter holders at other governments and agency type of institutions that are managing portfolios on behalf of large institutions. So basically, it's a bunch of portfolio managers and other investment professionals. I think that and I'm also a CFA charter holder. I got my charter recently. I started taking the exams back in 2013. And you also need 4 years of professional experience to get your charter. And I do think it's a big deal because the CFA program candidates end up going on to be, investment professionals for very large allocations of capital. And the fact that Bitcoin is going to be on the test just means that in 5 years' time, you're going to have, thousands of really high profile investment managers that, are well aware of Bitcoin and are also aware that, a small allocation to Bitcoin might be appropriate for a lot of investors. And it will just help adoption over the long term. It's not going to directly correlate to some huge rise in, the Bitcoin price or anything like that. I don't want to get carried away, but the truth of the matter is it is going to help institutional money familiarize themselves with potential investments in Bitcoin. And that does excite me. ETFs will help. Futures contracts will help also. Bitcoin isn't just going to be held by hodlers forever. Hodlers will release their Bitcoin to the public at a price. I know people think they are going to hold forever, but there is a price that everybody will sell at. So, that price is much, much, much higher than it is today. Some of the people that are all about the hodl mentality, they're all of a sudden going to be looking at a sum of money that changes their life forever. And they're going to sell, and the institutions will probably be the ones on the other side of that trade. And both parties will be happy, hopefully. So I do think that the CFA program adding crypto is a big deal. I hope that they cover some of the history of Bitcoin and, what was written in the Genesis block. I'm not sure that they will. But I do hope that people find what was in the Genesis block, because it does help you understand what Bitcoin is and what it was created for, and that it is meant to be sound money, and that was the intent from the beginning. And so while I doubt that that type of cypherpunk history and, the contents of the Genesis block will be in the CFA curriculum, people will end up there. I ended up there, and the reason that I got into Bitcoin and really, wanted to do that deep dive was there was all this talk about blockchain this and blockchain that in the financial industry. And I was like, let me check this out. And I ended up, finding out that Bitcoin was intended to be sound money almost right away because I had an Austrian kind of bias to start with, right? Those that have an Austrian bias to start with are going to get Bitcoin right away, right? And as far as the CFA test takers, and those that don't may or may not end up there. But net, it's going to be positive for adoption and positive for the education of people about this technology. And I'm very excited and very proud to be a CFA charter holder, knowing that they are going to start covering something that is absolutely essential for the future of finance.
Yeah, that's very cool. And congratulations on that. That's a lot of work. So, I mean, obviously you're not writing this test, so you can't give me the answers, but I just kind of wonder, like, how much, when they say crypto, like how much is it going to be Bitcoin and how much or how many of these altcoins do they go into? Because I don't know.
I really don't know. My guess is they're going to use the word cryptocurrency and blockchain a whole lot more than the word Bitcoin, just based off of some of the stuff that I read. But I do have to say that a lot of the investment banks on Wall Street that I deal with personally have great research material on Bitcoin and how it works. And so I can personally vouch for, quite a few firms. Let's call them a handful of firms on Wall Street that are just doing a great job, putting out material for their clients that don't have necessarily the ability to go find Andreas Antonopoulos' Mastering Bitcoin tomorrow and buy it and read it, right? They're not looking for it, so they're not necessarily going to find it. But if they see a research report from one of their largest counterparties about cryptocurrency, they might go and read it. And that a lot of that stuff has done an excellent job of explaining, how Bitcoin's blockchain actually works. And so that does make me optimistic that the curriculum will cover the functionality of a blockchain. And whether or not they attribute it to Bitcoin is anybody's guess. Again, I hope they do. I've added them. I've added the Institute a couple times on Twitter to try to, push my opinion on them. But I'm not involved at all. And we'll find out a little bit after the next exam is given. The level 1 exam is given in June and December, twice a year. Levels 2 and 3 are only in June. So maybe in December it'll be on the level 1 curriculum, and maybe some candidates that get their books will post the pages on Twitter, and we can take a look at what is really in there. And I'm sure that will happen. Bitcoiners aren't shy, and if the material is good, I'm sure they'll post it, and if it's bad, I'm sure they'll post it, and we'll all get to see what's in there pretty soon.
Yeah, very cool. That's good to know. There was something else I was going to say, and I just lost it. Oh, man. Okay, whatever. All right, let's see. Was there anything else big I had? Oh, I know what I was going to say. I was just going to say, it's neat, and it's kind of like it's good to have it, even though a lot of these things are kind of overlapping or repetitive. I think, this is something that when I started this show, I looked at and I went, well, is there enough podcasts already out there? And at the time there were a few, and they were mostly on YouTube, but it's kind of like, I think everyone needs to kind of hit their circles of influence, and for you, it's talking to those guys. And for me, apparently it's talking to strangers on the internet, but, and just kind of keep putting it out there, and eventually it's going to take root. And then the people that see it and get it will get it. And eventually everyone else will see what it's become and go, oh yeah, well, I was wrong. Okay, let me get on now.
Right.
So, okay, well, let's see. So Nick, you are on Twitter and Medium at Time Value of BTC. Is that correct?
That's right.
And you've got several articles. I'll put them in the show notes. This is going to be episode 23 if I hadn't said that already. So bottomshelfbitcoin.com/23 will be the show notes for everybody out there. And I will put links to Nick's articles and his Twitter feed. Nick, anything else that you want to plug or anything else you wanted to talk about?
No, thank you so much for having me. This was a lot of fun. Definitely check out my articles at Time Value of BTC, same handle on Twitter. And I'm definitely interested to hear from anybody that wants to progress these ideas. Developers are the target audience for my articles because they're the ones that can build this stuff. I can't. So I hope to hear from a lot of devs. But just anybody in general that has ideas. I've already had a lot of great feedback, both in Dallas and on Twitter. So thank you to everybody that has reached out. And it is really exciting to see people latch onto this idea and want to build solutions to some of these potential issues in Bitcoin here, with regards to capital markets. And so I look forward to hearing from everybody, and thanks again for having me. I appreciate it.
Yeah, absolutely. Thanks for coming on. All right, guys, that's going to be our show for today. Y'all make sure and go follow Nick on Twitter and Medium at Time Value of BTC. Go check out the show notes for this episode, bottomshelfbitcoin.com/23. I'll have links to his articles and stuff there. And you guys know the drill. If you want to support the show, go leave me a good review on iTunes or Stitcher. I think I checked and I have a total of 0 reviews. So on the plus side, there's no 1-star reviews, but there's also no 5-star reviews. So if you guys like the show, and I actually met some people at BitBlockBoom who had heard of the show, so that was encouraging, and it proved to my wife that I'm not just sitting in here talking to a microphone to nobody. But so I know there are a couple of you out there who actually listen to the show. Go leave me a good review on iTunes so that other people will see the show pop up and can listen and hear all these cool people that come and talk to me. If you want to support the show financially, you can become a patron, patreon.com/bottomshelfbitcoin. All the links are also on the website, and they'll be in the show notes as well here. So, and then you can also, of course, buy books in the Tuttle Twins series at my link, bottomshelfbitcoin.com/kidsbook. Those are great books teaching free market economics and liberty and the non-aggression principle and things like that. Really great series. I've read through them with my kids, and or just give them to your friends who don't understand what it means to love liberty. And they're good, easy entries for adults as well. So anyways, don't forget to follow me, keep up with all my stuff on Twitter at bottomshelfbtc. Same handle. I've also started posting some stuff on Instagram because, it's mostly memes, and then I kind of throw up an image for for each episode. I found about 5 other people on all of Instagram who aren't crypto shills, altcoin shills. So there's a couple people that are making good memes on Instagram. If you're already on Instagram, if you're not on Instagram, don't worry about it. You're not missing a whole bunch. But if you're already on Instagram, make your feed a little better. Follow me there too. All right. Next week, Pierre Richard is going to be on talking about institutional money coming into Bitcoin and about social signaling and some other things. So it's a really fun episode. We just finished recording that. So spoiler, if you thought I was doing these live, you were wrong, very wrong. Anyway, so I got a lot of good guests lined up coming down the pipe. So man, I'm excited to be back and come back for that. So here's the deal. I do want to end today's episode, since this is coming out on August 1st, Bitcoin Independence Day. I want to end this with something that I wrote, and I am not eloquent on the fly, but I can be a little poetic when I write stuff out and have time to plan. So this is going to be better if I read it. So I'm just going to read this to you guys and just kind of my thoughts on this and why this matters. So here we go. To me, Bitcoin matters because it is sound money that is not subject to the capricious whims of government central planners. It is a rejection of the fiat funny money fiscal policies that allow for never-ending welfare and warfare, the degradation of art and culture, the encouragement of consumerism, and societal impatience. It is an opportunity for a man or woman to keep what he has earned and transfer those earnings to their future self without the hassle of the physical exchange of precious metals like gold or silver. It allows a parent to transfer wealth to their children without the hassle of taxed inheritance. It allows a person to engage in voluntary exchange with another person, regardless of geographical differences, without needing the permission of anyone. Those funds cannot be seized, and the transaction cannot be censored. Bitcoin achieves this censorship resistance by the decentralized nature of the network. Individuals running their own nodes for their own self-interest create network security as a byproduct. To stop Bitcoin, you must stop each individual node across the planet. Over the past few years, a number of individuals and groups, sometimes working in concert, attempted to bend Bitcoin to their own vision of what it should look like. This ultimately culminated in August of 2017 in the divergence of Bitcoin and Bitcoin Cash, and then again in November with the attempted 2x fork. Powerful men and businesses associated with Bitcoin believed they could use legacy means to control a technology and network designed to disrupt the legacy system. Today we celebrate freedom from those bad actors who believed that if they took their ball and went home, the network name and money would follow. Who believed that if they colluded with miners, as governments do with unions, they could reshape the network to fit their business infrastructure instead of reworking their business models to serve the users. Today we celebrate individuals who, by simply running a program on their computer en masse, hodled the line against those who would have made decentralization, and thereby censorship resistance, ever more difficult to maintain, eventually leading to the collapse of everything Bitcoin represents. Thank you to Shalom Fry, who developed the framework for the soft fork. Thank you to Samson Mao, who gave users a hat to signal in the meat space. Thanks to everyone on Twitter and Reddit that posted memes and hashtag UASF. But mostly, thank you to every user who downloaded and ran that implementation from Shalom Fry. Those of us who came to understand these things after that fight owe you a debt of gratitude. Continue coding, continue hodling, continue running open source software. In the words of Timothy May, arise, you have nothing to lose but your barbed wire fences. I'm Josh Humphrey. Thanks for listening.